Hey everyone, my name is Geoff. I'm the head of marketing here at A2X, e-commerce accounting automation software for the world's leading Shopify, Amazon, eBay, Etsy, and Walmart sellers, as well as their accounting partners. And speaking of accounting partners, I'm joined today by Meryl Johnston, who is the founder of Bean Ninjas. If you don't know who Meryl Johnston is, I'm surprised because she's one of the leading voices in e-commerce and cloud accounting in Australia, and we're so lucky to have her here today. Bean Ninjas is an accounting firm specializing in bookkeeping, accounting, tax, and virtual CFO services for e-commerce businesses that are looking to scale. Meryl, I just want to say thank you so much for joining us and for sharing your expertise today. Anything that I might have missed on Bean Ninjas or that you'd like to add?
You've done a wonderful intro. Thank you. And you've nailed it with what we do and the services we provide. The way I describe it, if I'm talking to an e-commerce founder, is that we typically work with brands in the 2 to 20 million in annual revenue, and often they're selling on Shopify or Amazon and have created their own product and are trying to build their own brand. Sometimes they will be manufacturing their own, but often the manufacturing is happening somewhere like China, Vietnam,
Hmm.
Mexico. So that's a typical profile.
Awesome. Well, I guess that is a great segue into today's topic, especially as you start to think about $2 to $10 million brands. And the topic that we're going to talk about is building a finance team at your e-commerce business. So we're going to cover big questions of when you should hire, who you should hire and look for, how to know if they're successful. So Meryl, perhaps a good place to start, and this might seem a little unorthodox, but instead of talking about like when you should start to consider hiring a finance person for your e-commerce business, what are some of the main misconceptions that business owners have when they start this consideration process?
I'd say the first one is that they think of my accountant and that my accountant is going to be able to do everything in the finance team or every function. And I like to compare that to if you're building out a marketing team. So you don't just hire one marketer and they're great at copywriting, at design, at web development, email marketing, social media, paid media. That's not one person, that's a team. But often founders, when they first start working with an accountant for the first time, they think my accountant can do everything. So I'd say when building out your team, that is a common misconception. And then it can evolve from there as they start to have greater requirements outside of meeting tax compliance.
Totally makes sense. And Meryl, with that misconception in mind, what are the financial functions and potential roles that e-commerce businesses need to consider instead of just, the singular accountant?
I think it often starts with tax, and this is usually an outsource. You'd work with a accounting firm for this, someone to meet tax compliance, but there's a lot of other roles in there. And we've got an organizational chart here where you can see the financial controller function. And they're almost like the quarterback or the traffic controller. They will have a lot of people reporting to them in a larger finance team. But as an e-commerce business owner, you're going to need a lot of these functions too, which can be served often by a bookkeeper to start with. So accounts payable is paying bills to your suppliers. Accounts receivable, that's more relevant if you're wholesaling. If you're selling through Shopify, then you're receiving the money when the transaction happens, so you don't have debtors. But if you've got wholesale customers where you've got credit terms, then having someone stay on top of that with the invoicing and chasing up payments is important. Managing inventory, particularly if you have a warehouse, then having someone that is responsible for receiving goods, making sure that you received what you were supposed to, that stock isn't lost. Bank reconciliations is keeping the bank data that's coming through Zero, QBO up to date and matching that with the relevant transactions. Financial accountant they would be doing a range of things. I used to work as a financial accountant many years ago, and one of their responsibilities would be sending monthly reports. And those reports, they're to help the business make great decisions. So to use that data to decide, can you afford to hire somebody, or what's my most profitable or least profitable product? Payroll, if you're building a team, employees, then you're going to need to be compliant in how you pay them and also have someone that's taking care of those functions. So they're common functions in a larger finance team. You would have individual people in those roles. It's challenging to do that as a small business. And so you may have one bookkeeper or external accountant that's covering a range of roles, or they may have people within their firm that can cover those different functions to you for a fixed fee. The other two roles I wanted to mention, FP&A. So if the financial controller is coordinating a team of people who are looking backwards, so they're reporting on history, on what has already happened. The FP&A team is looking into the future, so they're forecasting what may happen. What's our cash flow forecast? What's that position going to look like in the future? So they're forward looking. And then the CFO, they're a strategic role, and they would have these specialists reporting in to them, and they're really to look strategically major decisions within the business. So I think another common mistake is a small business thinking that they need a CFO, whereas actually a financial controller who can give them accurate data is actually what they need. And I think there's a bit of a grey area around what does a CFO do compared to an FP&A specialist or a financial controller. But that's a bit of an overview of the different roles. And don't worry, you don't need every single one of these roles immediately as soon as you launch a business. But this is an example of how larger businesses would build their finance team and something to aim for as you grow. And we'll step through when you might add some of these functions to your finance team.
Yeah, so a scaled finance team, because I can just imagine the people that are watching it, specifically e-commerce founders, looking at it white as a ghost, looking at their P&L getting totally blown up and their margins evaporating, wondering, oh no. But the reality is, Meryl, you made a really great point in that you kind of build up to this. So this is a really great segue into our next question, which is, when do e-commerce businesses need to build their finance team and consider all of these roles?
Great question. And when I'm talking about finance team members, I'm encompassing people that would join your team as employees or contractors, but also working with outsource providers like accounting firms. So typically the first hire is a tax accountant. And that's because once the business has started and you're making sales, then you're going to have a tax requirement in the country that you're in to file a tax return, or in Australia we say lodge a tax return. So that's typically within the first year of you making money, you'll need to find a firm to work with to make sure that you stay compliant. Generally, the next phase would be adding in some accounting software like Xero or QBO. And that's great, but you're not at this stage getting a lot of great data to make decisions. So typically the next transition we'd see would be adding in a tool like A2X to help automate some of the bookkeeping. Transaction volume is increasing. You want to save time or pay less. If you're doing it yourself, save time, and also start to get clarity around cost of goods sold, moving to an accrual accounting basis. So you're moving into the scaling stage that you can see on the slide here. And this is where you're moving away from doing accounting purely for compliance and tax purposes and to use it for decision making. Your inventory may be getting more complex at this stage, whether you're starting to use multiple 3PLs, maybe you're considering running your own warehouse. And so your requirements there are getting more complex. And at this scaling stage, you're probably working with a bookkeeper, and that might be someone in-house or it might be an external bookkeeping firm. Then if we move to the established phase, the data requirements are becoming more and more important. The business is growing, there's more complexity. The founder and their team now need more information to make great decisions. And at this point, you'll often see roles like a controller either come in-house, or you may have that role with your external provider. You may bring an analyst in-house, an inventory planner. But you're starting to see that finance team shift from purely working with an outsourced firm to starting to come in-house. And as that finance team grows, you're starting to add in a clearer distinction between some of the roles that we saw on the previous slide, rather than having one person cover a lot of roles. And the reason that's important, something I didn't mention, was that there's different pay levels. So the CFO is the most expensive role, and you don't want that person doing bank reconciliations. So the more that you can have different people at different pay levels doing those roles, the more efficient and effective your accounting function or your finance function is going to be.
Totally makes sense, right? Like as your business is growing and you feel like there's a need for compliance or the tax man is going to come knocking at your door, you're probably thinking, okay, this is probably that inflection point where I need some help. I love how you went through each stage, but I do have a follow-up question because you did mention kind of the difference between outsourcing some of the accounting functions versus bringing that in-house. I'd love if you could talk to me about why you would consider whether to outsource or whether to hire somebody internally.
There's pros and cons of having a function outsourced or having it in-house. So with an outsourced function, one of the pros is that you can access senior level talent when you don't need somebody full-time in the role. So it would be difficult for a business in the early stage startup category to be able to afford a full-time CFO because that's not needed at that stage of business, and so it's too expensive. So that's one factor to consider. Is there the ability to have a full-time role? Something else to consider is how much internal knowledge is needed to do this role. So with something like tax work, you don't need a lot of knowledge about the business. You need knowledge about taxes in order to complete a tax return. Whereas at the other end, some things like inventory planning, that might need more in-house knowledge, or even some of the financial controller level tasks, there needs to be some knowledge about the business itself. So I think that's important. So the roles where not a lot of business level knowledge is needed are the best, I think, for outsourcing. So payroll's another example that works really nicely, where it's more about the payroll legislation and processes rather than the specific requirements of the business.
What about bookkeeping?
I think that would fit in the middle. And so bookkeeping does require knowledge of the business, and it can vary business to business. So it can work well outsourced, but it can also work well with someone in-house. And I think the decision there is more about, do you need one person and do you have enough work to keep them busy and do you want to manage that person? So that would be a consideration. So in that early stage, you're probably not going to do a lot in-house apart from what the founder is contributing to. In the scaling stage, you're probably still working with an outsourced bookkeeping or outsourced accounting firm for that bookkeeping function. I do see some e-commerce brands hire internally at that stage, but typically it's not just a bookkeeping role, it's an operations manager. And then in that established phase, that's when you really start to see some roles come in-house, and then those e-commerce businesses decide which parts work do we have a great team for and which bits are we going to work with specialist outsource providers.
Nice. And that organizational chart that you showed is kind of effectively what you're building up towards. And then I'd imagine that you're just making individual decisions on whether in-house or external, given kind of, I love kind of your mental framework. Does this require internal knowledge or does it not? And then kind of letting that guide the outsource versus in-house decision, which I think is actually quite smart.
There's probably one other factor to consider, which is the skill set of the founder. So, and again, you can apply this framework to building marketing teams too. But if the founder's got a strong accounting background or accounting and operations, then often they're clear on what needs to happen and they're in a stronger position to talk with an outsourced provider about exactly what they want. Whereas if the founder is weaker at a particular area, they can benefit from having someone in-house manage the outsourced relationship. So that's where if the founder is weak at finance, it can help to have someone in-house in that operations role managing the outsourced relationship.
Totally makes sense. So Meryl, you've done a really great job of going over what an organizational design could potentially look like for a scaled finance function at an e-commerce business. You then talked about when you should start to think about building that function, and then what roles to hire at each stage of growth, and then whether you should find somebody in-house or outsource. And that's all great, and I feel like if every business was the same, they could follow that exact journey. But the reality of the situation is that no two business is really alike, and I would imagine, like most other functions, you use marketing as an example. The organizational design might be different depending on the needs of the business, meaning no one size fits all approach to a finance team. Do you mind talking to me about that concept and providing a few real world examples of how you would customize a finance team for different types of organizations?
Absolutely. So I put together a couple of examples that we'll walk through. And before we do that, I wanted to mention how complexity impacts the way that you build your finance team. So we've talked a little bit about the scale of business that you're in, but the complexity of your operations are also going to impact who you need on your finance team. And if your business is more complex earlier, then you may need to scale your team faster than another business doing a similar level of revenue. So a couple of examples of things that add complexity. If you're doing your own manufacturing compared to buying finished goods, then that is a more complex process. You're buying raw materials, your team are going through a process to manufacture that product. There's more data, there's more inputs, there's more tracking that you're going to need for that process, and you're probably going to have someone on your team that is managing that. The same with if you're managing your own warehouse compared to if you're using a 3PL. It's someone on your team that is going to be managing your warehousing software, receiving goods, shipping goods, and so again, your team is you're going to need someone on your team that's covering that, so you'll have a larger team. Whereas if you're doing something like drop shipping, that is less complex. Someone else is taking care of a lot of that, of the manufacture and then the shipping of the product. And so at a higher level of revenue, your finance team might be smaller. Similar with SKU count. If you've got 10,000 SKUs compared to 10, that extra management, again, is going to need somebody on your team or external to help you with that. And so you'll probably scale your finance team earlier. All right, well, let's jump into some examples. So I put together a couple of case studies. These are based on working with a range of clients. So this isn't specifically one of our clients, just to set the scene. So in this case study, the founder is financially savvy. It's a new brand. They're doing about 500,000 in revenue. They're manufacturing in China, and the finished goods are getting shipped to a 3PL in the US. Their sales platform is Shopify, and once their goods arrive in the US, they're only selling to US customers. They're not selling to other international markets. So now that we've set the scene, I'll talk through how this new business might set up their accounting function. They'll likely work with an external accountant or accounting firm for their tax compliance. Because the founder is financially savvy, he's probably going to be doing the reconciling in Xero or QBO. But typically what we see when the founder's doing this as well as everything else is done on an ad hoc basis. It's not kept up to date weekly or monthly. Same with paying suppliers. The founder will manage it, but it's more, this supplier urgently needs to be paid. Okay, we'll do it, rather than having a defined process and day of the week that happens. Same with inventory planning. So the founder's making decisions about how much of each SKU to buy and placing those orders. We can move on to the next slide, which is this same business, but they've grown. So revenues increased from 500,000 to $1 million in annual revenue. And with that growth, the founder's got busy. And so he needs to get some tasks off his plate. One of the first things he gets off his plate is bookkeeping. And now, working with a specialist e-commerce bookkeeper, you'll notice that the reconciliations are now happening on a monthly basis rather than on an ad hoc basis. You'll also note that there's been some additional line items added. The founder now needs monthly financial reports, particularly because he's not doing the reconciliations anymore. He's a bit more removed from some of the finance processes. It's really important that he's getting monthly reports. He's working with an e-commerce accountant This is from the same firm, so he already has the tax accountant, but this is a different person from that team. So it's not a tax specialist. They're great at the management, the financial reports. And he's finding that really useful to track his gross margins and net profit margin to see how his business is comparing to some other people in a mastermind that he's in. Cash flow forecasting, this is getting more important as the business is growing and he needs to place larger and larger orders with the factory in China, and he's paying for those, or at least part of those, well in advance of receiving the goods, and that's starting to cause some cash flow challenges. Because the founder is experienced with accounting, he's managing that in a cash flow forecast spreadsheet to make sure that he's got enough money to pay, first of all, the deposit, but then the installments for these orders. So the story continues. This business is continuing to scale, and let's have a look now at how that finance team expands as the business scales. So revenue's now grown to $3 million a year, and they've also had some challenges with their 3PLs in the US. So they've just set up their own warehouse. They are still working with a couple of 3PLs, but they're trying to transition to their own warehouse. So that's in progress at the moment. So a couple of changes you'll note with their finance team. They're paying suppliers on a weekly basis, and the bookkeeper has taken over that function. And now that they have a warehouse, they've hired a warehouse manager. That's an internal employee, and that person is responsible for receiving and sending stock. So that's one example of how a finance team might scale alongside a business scaling.
So Meryl, that's a great example. And I love how you used a financially savvy founder as kind of one of the main drivers for how to think about building out the finance function. Would it be possible to provide an example for what a founder that might be a little bit less financially savvy would look for in their finance function?
I have another example. This is actually very similar. It's a very similar case study, but we've changed the skill set of the founder. So if you think back to the very first example, the new brand, 500,000 in revenue, the same setup, but in this situation, the founder doesn't have a finance or accounting background, and they haven't had a business background prior to starting this business. And so the way they'll build their finance team is going to be slightly different because they've got different strengths and weaknesses to the previous founder who had a strong finance and operations background. So we'll start off, and you'll see a similarity there that in both cases, one of the early engagements was with an accountant from a tax firm. And that's common. That's usually the place where everybody starts to meet their tax requirements. But you'll see in this case, this founder has decided to hire a bookkeeper. They know it's not their skill set. It's not something that they want to learn. So this is being outsourced to a bookkeeper much earlier. And you'll notice that it's happening on a regular monthly basis a lot earlier than in the previous situation. So this is a good result for this business, that even though the founder's not strong at finance, they're getting organized and they're working with specialists. But it does mean it's going to cost them more money than the previous founder who was doing it themselves. They've also prioritized hiring an ops manager. Now, this is at this level of revenue, they couldn't hire somebody full-time, but they were able to hire a part-time mum who has come from a corporate background looking for flexibility. And so they've got somebody really capable in this ops manager role. She doesn't have an accounting background, but she is very organized, and she will eventually be able to become the liaison with the bookkeeper to answer questions about transactions, because as part of her role in the as ops manager, she's responsible for paying suppliers, and she's also taken on that inventory planning function. So probably not at exactly the 500,000 in revenue, but as the business is growing and their revenue is starting to gradually increase from there, they'll bring on the e-commerce accountant for the monthly reports. And also, cash flow forecasting is not in their skill set, but it's really important for this business model where they're having to outlay a lot of cash up front before they get cash from their customers. So they're going to bring on a fractional CFO to help with that forecasting piece earlier. They're probably not going to have the revenue to support that at 500,000, but likely they may start to look at that before they get to the million in annual revenue. And again, that will depend on the fractional CFO. Some fractional CFOs might be $10,000 or $15,000 a month, but there are some that could do just that forecasting piece at a more cost-effective price for a smaller brand like this.
So that was another great example. I'd like to kind of jump back into the question of complexity, because I know that your last example is highlighting an organization that's a little bit larger, doing roughly $10 million in revenue, but their level of complexity, one could argue, is lower comparatively. And as a result, they would approach building out their finance team a little bit differently. Is that correct?
It is. So in this third example, you'll notice revenue is at 10 million a year, but they're using a dropshipping business model. And in this case, they're selling niche materials for tradesmen. So in the trades industry, their suppliers are offering them 30-day terms. So the product's made in China, it's getting shipped to Australia via an importer, and then they're buying that product from that importer on net 30-day terms, but they get paid immediately via Shopify. So in the previous example, there were cash flow challenges because that brand had to pay for their stock before they got it. In this case, it's the opposite. And so that makes this business model a lot more simple. They have less cash flow challenges because they're getting paid in advance. And so that means they need to spend less time doing things, or they don't really need cash flow forecasts. That's not as important as it was for the previous business. So in this case, even though the founder of this business they're not from an accounting or finance background, it's not their strength, but because the business model is simple, it means that their requirements for building out their finance team are more simple. So if we go through line by line, again, they've started with their accountant, working with a tax accountant at a firm. They've outsourced the reconciliation of transactions in QBO or Xero to a bookkeeper and paying suppliers to a bookkeeper as well as payroll. But they don't need as much in the way of monthly reports. I would still recommend it, but because of the strong cash flow position, they can keep an eye on things like their margins. They don't have to be as intense about how their finances are running. And then you'll notice at the bottom, they have a tax strategy and planning meeting with their accountant. And so that's not necessarily about the performance of the business, but that's for wealth creation to make sure that they're optimizing their business structure and the way that they flow profits out of the business. So again, the way that this business builds their finance team could vary founder to founder, but I think it's a nice example of the impact of complexity, or the lack of complexity can make your accounting function smaller and also more cost effective. So it's one of the benefits of having a simple or more simple business.
Yeah, because I think for the most part, folks draw a direct line between size and complexity of team to the amount of revenue that the organization produces. So the more revenue, the larger the finance function I need, because my accounting needs are significantly more elevated. But the reality of the situation is it all comes down to complexity, which I think these three examples do a wonderful job of illustrating.
And it is interesting, just more generally, seeing, we work with lots of businesses in the e-commerce space and seeing the complexity of their business model, and seeing some founders optimize for simplicity, where it does help with things like finances, but also with their marketing channels. But with a business like this, with drop shipping, if it's too simple, then is it defensible? Or are you building enough of a moat?
Okay, so I'm assuming that if you're watching this video and you're an e-commerce founder, you could probably relate to at least one of these examples. But I'm sure that you have a few additional questions, as do I. So Meryl, would it be all right if we do a few quickfire questions?
Let's do it.
Awesome. So question number one, is there a general rule of thumb for how much a brand should spend on their finance team? I'm getting flashbacks to kind of the original slide with fully built out finance function. But, you know, depending on the different size of organization, I'm sure that the answer is actually quite different.
As a rule of thumb, typically you'd expect to spend something between 3% of revenue. But as we've been talking about in this session, complexity is going to impact that. So if your revenue's lower, but you've got a complex business, then you'd expect that to push on the higher side. If you've got a more simple business, then you might be at the lower end of that. And then sometimes finance costs will step up. So if you hire a full-time role, that's going to be a big jump. And so that'll skew your percentage as well. But I think that's a nice rule of thumb. And then you can think about whether your financing requirements are fairly standard, or if you're expecting more than a typical business of your size, that you might be pushing beyond that rule of thumb.
Do you think finance is a cost center or a revenue center?
It's a good question. I think it depends how you're building your finance team and what they're doing. Because if they're reporting on historical transactions and making you compliant, I would say that's a cost center. But if they're getting data that can help you make clever business decisions, like focusing on what your most profitable product is, understanding shipping costs and how you might running scenarios on changing rates, they're exploring the profitability opportunities in different markets. That type of thing could be a revenue center. So I think it depends on how you're using your finance team.
Nice. I only ask the question because when folks think 1 to 3% of revenue, the next question is, what do I get in return? So I tend to agree. The more strategic the function, the more value you get out of it and the more revenue it produces. So let's say you're now in the hiring process. What are some questions that an e-commerce founder without much finance experience, like example number 2, should ask when hiring their first accountant or finance person?
Your first hire is probably going to be the tax accountant, and I think they're the easiest to hire because there's a lot of great tax accountants, and you're likely to find one. But some good questions to ask to making sure that you are is asking about the terms of the engagement. So what is included in the scope of the engagement? They're going to be filing or lodging your taxes, but what kind of other support is included? Are they going to bill by the hour? Are they going to give you a fixed price quote? I also like to ask if they've worked with similar clients, so similar businesses. So if you're a new e-commerce business with growth aspirations, then understanding, well, what size of client do they typically work with? What types of businesses? That's useful. I find the more challenging accountant to hire is when you're looking not just from a tax perspective, but you're wanting someone to help with the monthly management reports. If you're trying to find someone to do monthly management reports and help you with insights for business performance, that's when I'd spend a lot more time in understanding their specific experience, what it's like working together, and also things like, how are you going to communicate? So what kind of response times can you expect? Is communication through email? Is it through, can you pick up the phone? Do you have to schedule meetings? And understanding what you would like out of the relationship and making sure that your communication style is going to fit with the firm that you're working with.
Nice. And that's a great segue to the last question. What are some green flags when you know the relationship is working? And what are some potential red flags, especially if you're kind of like a less financially savvy founder, to know that you might start to consider looking for another practice?
Some red flags, if your numbers don't make sense. That's actually, surprisingly, that's a really common mistake that, I'm paying for management reports and they just don't make sense to me based on I'm pretending to be the business owner, but what they know of the business, it's just not reflected in the financials. And there could be a few reasons for that. One, there's errors. And so you're not working with an accountant that understands your industry niche, and they haven't understood nuances like calculating cost of goods sold or factoring in shipping costs or returns. Or they haven't taken the time to explain it to you. Either of those is a red flag for me. Another is around response times. And by response times here, I'm talking about the delivery of the financial reports. So if you're wanting monthly reports and it's the end of April, so April reports are due and you're not getting those reports till July, then that information is pretty old for you to be using it to make decisions. So is the firm meeting the deliverables that you agreed to around when they're sending reports? I will add that it does require input from you to complete the report. So you need to meet your end of the bargain and provide the information as well. So reports can be prepared on time, but there are a couple of examples. A third would be if they're not on top of compliance deadlines. So you shouldn't be hearing from your accountant only a couple of weeks out that they need some items to submit a tax return. Particularly if they've had months. In Australia, there's a very long deadline. So are they being proactive or does it feel very reactive?
And I feel like the green flags are the opposite of everything you just said. It's
Yeah,
usually two sides of the same coin, right? Like a green
exactly.
flag is, oh, they meet their like your expectations of when the financials need to be ready. They're proactive in their communication and responsive. The numbers make sense.
Yeah.
They got it. They tie out, right? Or at least kind of they pass the eyeball test. Those would all be, the corresponding green flags to the red flags that you had mentioned. So
Yeah.
I love, by the way, the first one that you had mentioned. Like you look at the numbers, and as a founder, you know, right? Like obviously you have a lot of context and expertise around your business. You're able to make really strong gut decisions with a little bit of information because it's actually just years of experience and context. So when you look at your numbers and if they just don't make sense, it's because they don't make sense, to your earlier point. So I love that red flag, and following your gut, I think, is a really important thing to do as an e-commerce founder, especially when evaluating the relationship with your accountant.
Yeah, absolutely. And to your point about the founders having knowledge and knowing what to expect, that's actually one of the first things I teach when um, I've had to read financial statements. The first thing is not to start looking at benchmarks or how your numbers stack up. It's to have expectations. So what am I expecting to see in these numbers? I knew that in Shopify sales increased, so I'm expecting to see that in my P&L. Oh, it's not there. Okay, something about these numbers is not right. So the first review is about what am I expecting to see and is it reflected here, before the second review, which is for analysis and to make decisions.
Okay, Meryl, you've provided a wealth of knowledge and really incredible information. So I'll try to sum it all up and touch on the key takeaways here. So first, structure your finance team based on your business model's complexity. Then you don't want to overhire too early, but you also don't want to underinvest either. You want to mix internal ownership with trusted external partners. So kind of this touches back to the conversation that we were having about when you should consider in-house versus outsource. And then obviously the function is going to grow with the business. I love your quick fire answer that your finance team should be 1 to 3% of revenue, which I think is a good benchmark. Any additional thoughts or takeaways that I might have missed?
I might just finish with one closing thought. When building your finance team, to reflect on who you are as a business owner and understand your strengths and weaknesses. So, Geoff, you did a great recap there. And I think also just come back to yourself about what are your strengths and weaknesses? Where do you want to spend time in the business? And where do you need support? And then gradually build out that team as the business scales. And don't be worried to change partners either. It's quite common. We see it often with our clients that it can take a couple of goes to find the right accounting partner. So be really clear about what you're looking for. And if your current provider can't provide that, give them an opportunity to, and be clear about what you want, but also be willing to it might take you a couple of changes or a couple of goes to find the right mix of outsourced partners and in-house team members.
And speaking of the right accounting partners, we have an incredible accounting partner here, B Ninjas. If you are looking for the right partner and B Ninjas sounds interesting to you, we'll put a link in the description below so that you can get in touch with Meryl and team and talk about how you might work together into the future. So Meryl, I just wanted to say thank you again so much for sharing your expertise with all of us on this very important topic. And to everyone else, we'll see you next time.